Okay, here we are for analyzing part 2. Here are our transactions and our chart of accounts that we're working with, and we were putting these on analyzing sheets. We had ended at the last one at the end of the second transaction where we had a decrease in assets. We looked up assets and we asked ourselves, is it an increase? No, in this case it's a decrease, which is opposite. So we have to use the opposite of debit, which is credit. So we would put credit there. Now, do our debits equal our credits? I got one debit, one credit, so I put yes. Let's go to the third transaction. Mowing equipment was purchased on account for $1,200 from XYZ company. Okay, so what is the company receiving? They're receiving mowing equipment. We'll put in equipment. And what are they giving up? They're not giving up cash today. They bought the equipment on account, which means they're going to pay for it later. So what are we giving up today? Today we're giving up this fact that this obligation is sitting on our shoulders that we're going to have to pay in the future. Okay? Today we owe out to the vendor, to the supplier. Okay? Now for the receive, we received equipment, so I need to find an account in the chart of accounts that goes with equipment. So here I have one called equipment. And so I'm going to type that in. And that is equipment. We own the equipment, so it's an asset. Okay, now I need an account for the give up, which is owe out to vendor. So I look back at my chart of accounts. Here, liabilities. When we owe out to anybody, that's liabilities. And that is, therefore, accounts payable is our only liability account, so that makes it easy. Accounts payable is an unwritten promise to pay in the future. Okay, what kind of account is it? Well, we just said it's a liability. Okay, now for our increase decrease, we go to the top. Do we have more or less equipment than we did 5 minutes ago? Well, we had no equipment 5 minutes ago, so we now have an increase. Okay, go back to the top. Do we owe out to the vendor more or less than we did 5 minutes ago? Well, we owe out more than we did 5 minutes ago, so that's an increase in a liability. Now I look up my debit credits. I have an increase in an asset. I look up asset on my debit credit chart. I go up and say, do I have an increase? Yes, I do. So therefore, that increase in an asset is a debit. Okay? Increase in a liability. I look up liability. Do I have an increase? Yes. So that's a credit. Do my debits equal my credits? I have one debit and one credit, so yes, they do. Okay, next transaction. Okay, we have mowing supplies were purchased with cash, $150. Okay, mowing supplies purchased with cash. Okay, so what did we give up? What did the business give up? Well, they paid out cash, so they gave up cash. What did they get in return? Supplies. Okay, so remember that the difference between equipment and supplies is that equipment, we're going to be able to use that for years. Supplies, usually, we're only going to use it for a matter of months and we're going to use it up. We're going to use it up in less than a year. It's a current asset. Okay, so for my give up, I gave up cash, so now I need to find an account. So of course we'll use cash, and we know that that is an asset. Now for supplies, I need to look on my chart of accounts. For supplies, here I have an account called mowing supplies. And that, of course, is also an asset. You want to put in the name of the account exactly the way it is on the chart of accounts. Okay? Now for cash, we go back up to the top. For cash, do we have more or less cash than we did 5 minutes ago? Well, we paid cash out, so we have a decrease in cash. Okay? Go back to the top. What about supplies? Do we have more or less supplies than we did 5 minutes ago? Well, we received replies, so we have more supplies. We have an increase in supplies. Okay, now I look up my debits and credits. I have an increase in assets. I go, here's an asset. Do I have an increase? Yes, so that's going to be a debit. Then I look here, I have a decrease in an asset. I look up asset. Do I have an increase? No, I have the opposite of increase. I have a decrease, so I have to use the opposite of debit, which is credit. Okay, I have one debit and one credit, so yes, my accounting equation balances. Okay, mowing services were sold for $860 on account. Okay, mowing services were sold on account. Okay, so what are we giving up? We're giving up the fact that we had to do mowing, that we sweated, that we sold our services. Sold services. Okay, we performed the services. We sweated. Okay. What did the business receive? Well, it didn't receive cash today. We sold the services on account, which means the customer is going to pay us later. We're going to receive it later. But today, the customer owes us. They legally owe us. Now I have to find accounts for these. For sold services, whenever we sell anything, that's a key word for revenues. We only have one revenue account, mowing fees earned. Okay? And so that goes there for the give up. Mowing fees earned. What kind of account is that? Again, whenever we sell stuff, it's going to be a revenue. Okay, we received customer owes us. Now, whenever the customer owes us, that means we're going to receive it in the future. So that is accounts receivable. And you can put A/REC. And accounts receivable is an asset. We own that money, even though it's not in our pocket yet. Still sitting in the customer's pocket, but that is legally our money. We own it. So that's an asset. Okay? Now we go up to the top. Did we sell more or less services than 5 minutes ago? Well, more. Okay? We just sold some services. So that's an increase. We go back to the top. Do the customers owe us more or less than they did 5 minutes ago? Well, they owe us more. 5 minutes ago, they didn't owe us anything. Now they owe us. Okay? So now I have an increase in an asset. I looked that up on my debit credit chart, and that's a debit. I have an increase in revenue. So I look up revenue. Do I have an increase? Yes. So that's a credit. I have one debit and one credit. So yes, it balances. We go on to the next transaction. Okay, we paid the phone bill, $80. Okay, so here we gave up cash, we paid it out. Now, if we just got the phone bill, but we didn't actually pay it on the same day we got it, then we would set that up as a owe out to vendor. But here we actually paid the cash, and we received, in exchange for that cash, the use of the phone. Okay, use of phone. Okay, so for cash, we're going to use cash, which we know is an asset. And for the use of phone, we know that that is, whenever we use something, going to be an expense. And here we have telephone expense. And that is an expense. Okay, we go back to the top. Do we have more or less cash than we did 5 minutes ago? We have less. That is a decrease. Do we have more or less use of the phone than we did 5 minutes ago? We have more, so that's an increase. Now I have an increase in expense. I looked that up on my debit credit chart, and that's a debit. We have a decrease in an asset, and that's the opposite of increase. That's a credit. We have a debit and a credit, so yes, it balances. Okay, next transaction. Mowing services were sold for cash. Okay, so here we received cash. We gave up the fact that we sweated, we sold services. Okay. The account we're going to use for cash is cash, and that's an asset. Account we use for sold services is going to be a revenue. We look under revenues, it's mowing fees earned. And that's a revenue. Okay, we go to the top. Do we have more or less cash than we did 5 minutes ago? We have more. Customers gave us cash. Did we sell more or less services than we did before? We sold more services, so that's also an increase. I look up increase in an asset, and that's a debit. I look up increase in revenue, and that is a credit. I have one debit and one credit, so that's a yes.